Welcome to HSBC Global Viewpoint, the podcast series that brings together business leaders and industry experts to explore the latest global insights, trends, and opportunities. Make sure you're subscribed to stay up to date with new episodes. Thanks for listening, and now on to today's show.
This podcast was recorded for publication on the 10th of July by HSBC Global Investment Research. Analyst certifications, disclosures and disclaimers must be viewed on the link attached to your media player.
Hello and welcome to Under the Banyan Tree, where we put Asian markets and economics in context. I'm Fred Newman, Chief Asia Economist here at HSBC. We're coming to you as ever from Hong Kong, and this city is very much the focus of today's podcast. It's taken a while, but there's a sense of a new life being breathed into Hong Kong, and with the pandemic and ever more distant memory, things do feel like they're on the up. But does the data support this feeling? Joining me today are Head of Hong Kong Equity Research, Michelle Kwok, and Greater China economist Aaron Shin. We're going to take a look at Hong Kong's financial markets, fund flows, property, tourism, and more. Let's get the conversation started right here under the Banyan Tree. Okay, welcome back everybody to the studio. So I'm joined here by two experts on the Hong Kong economy. One, of course, being Michelle Kwok, who is our head of equity research in Hong Kong, and also Aaron Shin, who is our Greater China economist, but also focuses on the Hong Kong economy. And the reason why we invited these two ladies to join us here in the studio today is because there is a bit of a buzz coming back into Hong Kong. So I've been here, 19 years, and, there's some ups and downs, and this is a very cyclical economy. And, of course, we had COVID-19 like other economies as well. We had, flights were canceled in and out of Hong Kong, and things were slow going. But suddenly the streets are fuller. There seems to be it's harder to get a taxi, actually. Maybe that's because of fewer taxis around, but it's just hard to get a taxi. And so it does feel a little bit that Hong Kong is coming back. And I wanted to kind of delve into that a little bit. And one area to start with is, of course, the financial sector, because that's a large part of the economy. I think, Aaron, correct me if I'm wrong, but I think it's about a quarter of the economy or so.
About 20%. About
20% of the economy. So one of the largest sectors here. And, of course, within that, it is the equity market, Michelle, that is, the driver, right? If you think about Hong Kong as a financial center, it is equities. It's that's a dominant asset class, if you will. Now, tell us what's going on in the equity market. What's the sentiment like? I think we had 4 or 5 years of down years in the equity market, but suddenly there's a spark, isn't there, among equity analysts and investors in Hong Kong suddenly. What's driving that?
Definitely, Fred. I think the equity market is up 20%, domestic equity market up 20% year to date. It's a big number and a very significant outperformance. What drove that initially is just money coming from mainland China, is what we call the southbound, the money that's flowing into Hong Kong. And then the sudden squeeze in the local rates in Hong Kong that actually made equity a very, very interesting investment proposition.
So when you say a squeeze, you mean that interest rates fell in Hong Kong,
right,
encouraging people to buy more equities because
Correct.
They're playing on dividends or expecting dividends to be paid at a higher than the interest rate they would receive in their banks. That's what you mean?
And of course, there has also been quite a lot of IPOs in Hong Kong, the initial public offerings. And in fact, in the first half of the year, Hong Kong ranks number one in terms of the amount of capital raised globally.
Now, that's interesting. What does this mean? Let's put this in perspective. So what you're saying is Hong Kong is, of course, a large equity market. But when you say it's the number one market for equity raising this year, that means that companies have been able to do IPOs or other equity issuance and raise money. And have actually raised more money here, you're saying, than in, say, New York or London or Tokyo or in other places in the world?
Yes, from a global perspective. So much more than other parts of the world, including, say, New New York. So Hong Kong is number one year to date. So that is very important because in the context of what you mentioned at the beginning of this podcast, we've had a very tough market for more than a few years now. And so that swift turnaround in performance, it's very encouraging for corporates looking to raise money. And there is then this mentality that corporates are fearful of missing out if they do not, take the opportunity to capture this window to raise capital. While
and
the
suddenly
capital
everybody's
market
coming here and raising money, and now suddenly investment bankers have a bit more of a spring in their step, I guess, in Hong
That's
Kong.
right.
Yes, that's maybe where
much
the
more
buzz,
to look forward to.
Much more. The pipeline is still full. We know that there's still a lot coming second half of the
Very
year.
rich. I think 200 applicants or so.
200 applicants. So
Yeah.
this is obviously would be potentially a record year for Hong Kong. We don't know in terms of numbers, but this is certainly a very, very high number. Now, to put a little bit that in perspective, you mentioned that there is money coming from China, mainland China, into Hong Kong. And I think that is an important point because if you think of Hong Kong as a financial center, really its role for probably 20 years was the intermediation of global capital into China. What we mean by this is essentially Hong Kong bankers facilitated the investment by global investors into mainland China. So this was factories, this was equities, this was all sorts of, financial and legal services around this investment. I think there was a sense that this flow had slowed down, in part because China has itself so much capital now. It doesn't really need foreign capital. It has its own know-how. So that flow probably slowed down, partially for commercial reasons, maybe also because of geopolitical tensions. But the main point here is that really what's now happening, what seems to be happening, is a reversal of that, whereby Hong Kong is now taking Chinese capital, Chinese savings, and they're kind of pushing it to the rest of the world. And so you hinted at something, Michelle, is that we have a lot of inflow from mainland Chinese money coming into the Hong Kong stock market, driving up demand for equities. And that obviously then raises valuations, gets more activity, IPOs. And that's partly because we have essentially getting mainland capital to come in here. But Aaron, I want to bring in you here because that's really an equity view. There's other channels of inflows from mainland China into Hong Kong. But put us a picture around this. First of all, the saving rate is very high. They don't really need all the savings in mainland China, so it's starting to kind of flow into Hong Kong. Is that how we should think about it?
So a few things to consider is that mainland China still has some capital controls, and as Hong Kong is a key gateway between mainland China and the rest of the world, we've got these very unique programs. They're called Connect programs, and they're across different avenues. So one is the Stock Connect, as Michelle has mentioned. We also have Bond Connect. It's been recently considered that maybe they'll be adding some more quotas for the Bond Connects here. They've also recently launched things like Wealth Connect, Swap Connect, recently also had Payment Connect.
So these are all very technical terms, but what they really means are channels by which mainland Chinese savers can take money into Hong Kong, which previously was harder to do. Is that right?
Yes. So basically, it's a controlled way for them to move the capital between mainland China into Hong Kong in a kind of closed-loop system that is then they can, distribute it to various investment choices.
So essentially, you had an economy, mainland China, that had capital controls. That meant that an individual Chinese couldn't really take their savings outside of mainland China. There were some exceptions, like you could take maybe $50,000 per year, but there was a lot of paperwork involved with that. But really what's happening now is suddenly we have regulatory changes where mainland Chinese officials allow essentially a bit more money to flow, right? And so it might flow into the equity market, it might flow into the bond market, other savings products. And so that seems to me a game changer for Hong Kong, because that means that suddenly the savings you have in mainland China can flow into the Hong Kong economy and kind of revive the domestic financial system. And that's maybe why we see also this renewed vitality in the equity market. It's not the whole story, but certainly it's built around this. Now, this is obviously gives the Hong Kong economy a bit of a kick, but I wanted to broaden out the discussion about what it means, not just for the financial sector, but also for the overall economy. And Michelle, let me come back to here. So one other important sector is obviously the real estate market. Now, you're also an expert on the real estate market, mainland China, but also Hong Kong. What have you observed here? Because obviously with all the economic challenges, property prices have declined in Hong Kong as they have elsewhere. That's very important for the local population. There's a lot of wealth that sits in property. Is there a bottoming out happening here? Is the enthusiasm in the equity market starting to spill over into the real estate market?
Yeah, so building on what we discussed earlier, real estate is extremely interest rate sensitive. So when we have lower domestic interest rate, we have already seen an increase in transaction volume in the Hong Kong property market. We have seen developers being able to sell their projects easier. Some developers have been able to lift home price a little bit just to capture that opportunity there. And we have also seen banks actually having a more, proactive approach in offering rebates for prospective home buyers. And very interestingly, the one factor that I think would really contribute to the positive momentum here is when we look at the Centerline Valuation Index. This index actually...
This is a property price index published by Centerline, which is a property broker?
Property broker, but what actually it reflects is banks' property valuation appraisal. And that to us has been quite encouraging because it means that banks' valuation on properties for people looking to purchase a flat, that valuation is much less aggressive recently. So for people...
Less aggressive, meaning banks are offering higher valuation.
Higher valuation.
So that means banks are more confident that actually the market is turning around.
That's right.
So it's not just the buyer. You're saying the banks themselves,
are facilitating this transaction.
That.
Yeah.
Now, this is interesting, but Michelle, I want to probe a little bit further. You're talking about the residential market.
I'm talking about the residential market.
What about the commercial property market? Because here we've had a bit more headwinds, didn't we?
Yeah, I think surely the office market has been very, very tough. Remains pretty much, I think, a market view that the challenge is here to stay. But I think the one very interesting thing that we have seen lately is the notable transaction. Probably one of the largest commercial office leasing transaction that we have seen in decades is Jane Street, which is a liquidity provider and a quant trading firm.
It's a U.S. financial institution.
That's right.
Jane Street, yes.
Taking up around 6th floor at an upcoming project in Central, a premium Grade A project. So that to us is a boost of confidence. It basically reaffirmed Hong Kong's status as an international financial hub. So Jane Street willing to take up the space there would ease the pressure in the commercial real estate market and also hopefully reset pricing in the commercial real estate market.
So that's a good signal. That's a vote of confidence for commercial real estate, but also a vote of confidence then into the financial sector of Hong Kong. If you have a major U.S. financial institution taking out this big lease in Hong Kong. So certainly, again, the stories here fit together. Now, maybe this is a great moment to take a quick break. And when we come back, I'm going to talk a bit more about retail assets, that is malls, for example, that's tied into the retail sector of the economy, which has been struggling as well. So welcome back, everybody. We talked about sort of this revival in the Hong Kong financial sector and how that is spilling over into the rest of the economy. Now, Aaron, clearly a big part of the economy is retail, shopping. Hong Kong has been the shopping mecca for many, many years. We have these glitzy malls everywhere. But here, too, things were not going as well in the last few years. Give us a perspective on that.
Right. So historically, Hong Kong's retail sector has seen, a lot of drivers from mainland Chinese tourists. Over the last few years, since the reopening after COVID-19, we were expecting that there'd be more mainland Chinese tourists coming back to Hong Kong, but it's been a little bit more gradual than we expected. So that's provided a little bit of pressure.
Well, now, why are the Chinese tourists so important for the retail sector? Is that because they drive shopping in Hong Kong, or
So
why?
mainland Chinese visitors before the pandemic were averaging about 4 to 5 million per month. That's more than half of the population of Hong Kong. So that's quite a lot of visitors. We're not quite back to that level yet. We're probably only about 2/3 to 3/4 of that level. So that has played a role in why the retail sales have been kind of a little bit more sluggish. Mainland Chinese consumer sentiment still a little bit weak there. And they aren't spending as much per capita, too. So that has all kind of weighed on the retail sector. But then the other side of that matters, too. There's more Hong Kong residents going elsewhere and spending.
I was just about to ask you. So is that, there's a flow in the other direction as well, right? Hong Kongers are going shopping in Shenzhen, which is just across the border with mainland China.
Yeah, there's a value proposition here where you can go to Shenzhen, you can get your hair cut for much lower price. So we have seen that Hong Kong residents have been kind of going outward quite a bit. But, the recent month, we've been seeing a little bit more of an improvement in some of the mainland visitors. It does have some volatility here, but maybe some of the strengthening of the RMB has played a role in that. But the government's also trying to kind of explore new avenues to drive people to Hong Kong. So we have these mega events. They just built out this new stadium, Kai-Tak Stadium, capacity of about 50,000.
And I think you had the Hong Kong Sevens rugby tournament was there. Of course, that was the first event. But then there was also concerts now, I think.
Coldplay came over.
Coldplay came there, yes. We have concerts now almost on a weekly basis here in Hong Kong. So is that helping?
Yes. So I think that it's actually a healthier way to think about, driving consumption in the economy. In the past, people from the mainland just coming to buy luxury products, maybe that doesn't necessarily add as much value add, but if instead we're turning more towards services, more cultural things, that builds goodwill, that is actually really good for Hong Kong's economy from a more kind of medium and longer term perspective and from a value add perspective as well.
So here, too, there's some green shoots, although there's a long way to recover. In fact, one statistic I saw the other day is that restaurant sales in Hong Kong today are still 8% below the 2018 level, in part because many people are going to Shenzhen across the border to eat dinners on Friday and Saturday nights. And you can tell this from this data because Chinese restaurant sales are particularly down, whereas other cuisine is not down as much. And presumably you go to mainland China to have Chinese cuisine. But Michelle, what does this mean for all these glitzy malls in Hong Kong and all these, these are assets that are held by large Hong Kong companies. It's a big part of their portfolio. Hong Kong has been, as I said, the shopping mecca. What are we doing with all these malls now?
Well, I think surely the retail scene remains somewhat challenging. Retail rents remain under pressure for the rest of the year, we think. But we think the magnitude of decline is going to narrow somewhat. But very interestingly, when we think about and we chat with some of the discretionary retailers, it seems that their recent momentum in terms of retail sales has improved somewhat as well. So retail becomes a very, very interesting landscape whereby select retailers can still turn in very respectable retail sales numbers, while the others may struggle a little bit more. But when you look at the non-discretionary spectrum, the traffic there is still outperforming the broader market. So somewhat resilient, but this is not to say that challenges are now behind us. It's a market whereby I think landlords are still trying very hard to either transform themselves or think about what the future consumers are actually after.
And I think that's a good note to end on, because I think one thing we can all agree on, if you look at Hong Kong's history, is the amazing ability to reinvent itself, right? It's not the first time this economy has essentially retooled itself. And I'm always amazed at how quickly things change here, how adaptable businesses are. And so this is just a repositioning of Hong Kong. And we might be surprised, actually, how quickly Hong Kong comes back. But anyways, both of you, thank you very much. We'll check in again in a few months, see how this story evolves. But I do think there is a bit more of a buzz on Hong Kong streets now. And so we'll be keen to see how things evolve from here. Thank you very much.
Thank you.
And that's a wrap for this week's episode. Many thanks as always for joining us under the Banyan Tree, and do continue to tune in throughout the summer period. From all of us here in Hong Kong, take care, and we'll talk to you again very soon.
Thank you for joining us at HSBC Global Viewpoint. We hope you enjoyed the discussion. Make sure you're subscribed to stay up to date with new episodes.